mid caps and the balance on small caps. I think if that's the kind of composition which you have, I believe that these are good times, where you should look to maybe average it out further, try to, put in more capital, maybe an additional couple of lakhs at current, prices would be very, very attractive. Yes, you are having a notional loss, but then a 10-15%, notional loss compared to, what the markets and what the stocks have inherently shown is still a relative outperformance. I would suggest that you should stay on rather than being a bit more perturbed with this short-term volatility. I think you have to hold on to it from more of a medium to long-term perspective. So my sense is that we are into a phase of tough times in market, but I think once this phase passes out, you could probably see these stocks recovering quite sharply.
Okay, this one is from Padma, and Padma is saying that she has HDFC Life purchased at 650 rupees per share. She wants to know whether she should continue to hold on to it or shift to Tata Steel or Hindustan Zinc for the medium term. What's your take on this one, Kunal?
Well, I would not suggest a switch from a relatively low beta stock like HDFC Life to maybe Tata Steel or Hindustan Zinc and such other names, because those are two complete different entities in terms of price nature. So the commodity space, we've seen how sharp the correction is, and even the rally could be more swifter. HDFC Life is a stock which is far more stable. You've not seen any major price crashes into the stock price except for the last 2-3 months. But then relatively, when I look at the last 2 years of chart patterns, it's still a relatively low beta stock. So it's far more suited to these kind of market scenarios. And even if the market recovers, say for the next 3 months, 6 months kind of a time frame, you could probably see HDFC Life coming back to your cost price. So I would suggest to stay put.
Okay. We've got Subha who's asking a question, and she's from Chennai. She's asking about Birlasoft, Avinash, which he's picked up at an average price of 471. She's losing value right now. She's wondering whether to switch, and if she has to switch, then which stock should she look at?
I think, Alex, Birlasoft has come down because clearly I think within the tier 2 IT category space there are some more pressures, especially on the attrition side. So I think if she wants to switch, I think within the given scenario, I think Mastek and Persistent would be better choices. Persistent definitely could qualify as a better choice if she is looking at a 12 to 18 months time frame. Here the company would gain not only from its offshore business model, but even from its product business, and definitely the risk reward definitely looks better as compared to Birlasoft.
Right, this one is coming in from Abhijit, and this one also is for you, Avinash. He wants to know about Avenue Supermart. He wants to know whether it makes sense to buy it at current market price for a long term. He is a long term investor is what he's saying. So it doesn't make sense for now to look at DMart?
I think, Cheryl, the stock has already corrected, from its top by almost 50 to 60%. But if you see the earnings growth engine, I would sense that even as of now, valuations look pretty expensive. And I think despite the fact that now post-COVID activities have become normal, the risk reward is definitely not very, very attractive. So I would believe that, I think this stock is something where I would believe a further correction, if it happens, could be a good entry point. But at the current levels, I think he should not venture out.
Ram from Coimbatore is asking a question. He's got 130 shares of BPCL, Kunal, which he's bought at levels of 450. He's asking if he should accumulate at these levels.
I would not suggest so. I would suggest to maybe look out for some bit of marginal rallies into the stock price as a good price to try and exit the stock and shift to some other sector. Particularly, the OMCs in the last 2 years, 3 years, when you look at it over the last 5 years as well, have not been great wealth creators. So I think purely in that sense, and the price performance and the relative volatility in crude oil, which could continue for at least another few quarters, I believe that it makes a lot of sense to try and exit the stock, or at least avoid averaging out further.
All right, this one is coming from Shiva Bharat, and he wants a view on Healthcare Global for the longer term, and also he wants an entry level for it. Avinash, will you be able to help him with an entry level, or also you will be able to help with a long-term view on this one, I'm sure?
Yeah, I think as far as healthcare is concerned, I would believe that considering the kind of business model and the kind of value unlocking which they have done by demerging one of their businesses, definitely it sounds positive for the longer term. But I think as far as the price is concerned, Cheryl, I would be a little hesitant because valuations, based on FY23 still look fairly expensive. So my sense is that, given the choice of entering the stock, I would believe that at least a 10 to 12% correction could be a good entry point. So I think keep on observing the stock. The business is very good, fundamentals are fine, but I think the price point could definitely be better if the investor gets the stock at say 8 to 10% lower levels.
Okay, we've got a question coming in from Virendra, and he's bought HEG, Kunal, at levels of 2,560. I do not know what his time horizon is. He said, okay, so he says that he wants to hold for a year. I'm assuming he wants to hold from a year from now. He's bought this stock about 8 months back. What should he do? Should he hold or should he book the loss?
No, I think you should hold on. I would not say to try and put more additional capital over here because it's a very, very high beta name. So corrections into these stocks on a short-term time frame could be a bit more sharper. But then the monthly charts for HEG are showing some sort of a divergence, bullish divergence set up in play, which means that this 1000 mark, 1040 mark where the stock is trading right now could actually turn out to be a good support band. So give or take maybe the next few weeks and few months of volatility, I believe that the stock should try and recover from current levels.
Okay, this one's from Natajan Ramesh, and he wants a view on Affle. He's saying that he already has about 100 shares in Affle that he is actually purchased at 1,080 rupees per share, but he wants to know technically and fundamentally how does this one look over a period of 2 years. But let me get a technical view on Affle India. What's your view on this one?
So, many of these new age stocks as such, they've, gone to a very sharp correction. Even Affle has corrected from 1,500 to I think 1,000, 1,040. Where it's currently trading. So price-wise, 30%, 35% correction from the all-time high levels is supposed to be a good statistical entry point for such kind of names. So we'll wait out for maybe the next few weeks. If the stock holds on to this 1,000 mark, then I think it makes a lot of sense to try and average out the stock at current levels.
Okay, Deepshika has got a question on Tata Motors, and this stock is lost ground from the levels that she's bought at. I think she's bought at the highs. She's bought at over 500 rupees, 503 rupees per share. She's wondering what to do. Avinash, on the fundamentals, you would look at Jaguar Land Rover, wouldn't you?
Yeah.
And see how that pans out. But what should she do? Should she hold on at this juncture?
I think, Alex, if she has a long-term view, then I think she should take the opportunity to obviously average once the fourth quarter numbers are out. My sense is that at least for the next 1 or 2 quarters, numbers may not be great because of the headwinds, from the Russia-Ukraine war. I mean, typically crude prices going up, semiconductor chip availability. But I think if you look at FY23, hopefully second half of FY23 should do, the company should do a lot better. And I think since she has purchased the stock at a pretty high level, I think she should obviously use any weakness in the stock to accumulate some more stocks. But yes, keep a time frame of at least 12 to 18 months. I think Tata Motors can definitely bounce back, but I think clearly you need to average out to ensure that your break-even price gets lower.
All right, this one is a tricky question that I have for you, Kunal. Is coming from Samir Jana from West Bengal, and he wants to know whether between SRF and Titan, which one is a good investment at current levels, and which one is a better option to invest in. SRF, specialty chemicals; Titan, we all know, jewelry maker, watchmaker. So which one of these two? So
both have done fabulously well. Titan over the last 2 decades has done phenomenally well. So is the case with SRF as well. I remember tracking the stock when SRF was in 3 digits, and I think the last 10 years or so have been quite phenomenal for this kind of a stock. So and my sense is that purely based on the kind of price action, I think SRF could actually turn out to be a much better bet. The chemical space as well holds a lot of juice from a longer term play. I would suggest that if I have to make a choice between these two, I would go with SRF.
Okay, I want to come back to you, Kunal, on a view on Urja Global. This is a stock that is obviously not done very well for itself. It's down about 6% in trade today. We've got a viewer, Uttam, who's bought at levels of 19.1, and he's wondering what to do. He's got a short-term view.
Well, I would suggest a good time to try and exit the stock. Even though the chart patterns have been quite severe and sharp on the downside since start of 2022, I think this is the time where you have to try and jump onto more large cap names. And I think if I can probably try and suggest a couple of other large cap names, Tata Power could actually be a much better bet.
All right, this one is coming from Joy Sheila Prema and wants to know an entry level for Vaibhav Global. What's your take on this one? Kunal, no doubt this one has seen a sharp fall after the sharp rise as well. Right now, does it make sense to enter Vaibhav Global, and if yes, then what's the entry level? So
price wise, I think good zones for the stock, because it's retraced more than 50% of the rise from the COVID lows for Vaibhav Global. So I remember the stock was at 120, went up to almost 1,000, 1,020 levels, and now it's come back towards 400. So it's come back towards more than 50% kind of a retracement. So price wise, very attractive. But then I'm not sure if there is any major development into the stock price which has led to this very sharp correction. But I think if you have a time frame of maybe 1 year, 2 years plus, then you can buy the stock at current levels. 500, 550 could be a good moderate target which you can look out for.
Avinash, Jubilant Foodworks bought at levels of 618. Rahul from Hyderabad wants to know if he can purchase more or should he sell? He's got an investment horizon of about 5 years or more.
I think, Alex, as far as Jubilant Foodwork is concerned, I think this is a story which is well known in the market, and I think the QSR space is now very well competitive. There are many other players which have entered the markets. So my suggestion would be that, if you can look at another companies in this pack, especially Devyani International, which operates in the QSR space and where the risk reward is significantly more than Jubilant Foodworks. It's not that Jubilant Foodworks would not grow, but the risk reward is definitely better positioned for Devyani International. So I think a switch could be, much better for him.
Right, and with that, actually, we've come to the end of the query segment. Thank you so much, Avinash, as well as Kunal, for joining us on the show and resolving all the viewer queries and talking about the city gas distribution companies as well. But Delivery's 5,000 crore rupees IPO has launched, and the fresh issue worth 3,600 crore rupees will be used to fund its acquisition and expansion plans. Management tells ET now that they are not the usual new age tech firm with a strong footing in the brick and mortar as well. Let's listen in to the conversation that my colleague Nayantara Rai had with the management.
Delivery, a new age logistics company started in 2011, is headed to Dalal Street. It's raised more than 2,300 crore rupees in its anchor book, 64 anchor investors that are coming in. It's an IPO of 5,300 crore rupees that is going live today. Joining me are two of the co-founders of Delivery, Sahil as well as Kapil. Thanks guys for joining us here on ET Now. It's a big day. Sahil, you're either very brave or the markets will say you were really crazy if this doesn't go as per plan, simply because of what's been going on. 3 trading sessions after the US Fed increased rates, we saw US tech stocks lose about $1.5 trillion in market capitalization. And now you're coming out with an IPO after what we've seen with the Zomato, with the Paytm, with the Nykaa. Sahil, help us understand the timing of this IPO.
Sure. Thanks for having us, Nayantara. I think from our standpoint, we feel like the business has reached a stage where we're mature strategically, we have mature business models across all of the segments that we operate in. And we've reached a certain size and scale where there's a certain amount of predictability in terms of how the business performs. It's a discussion we've been having with our board for some time now. And we took this decision together, saying that this is ultimately, while not the most ideal time for a company like ours and for a good company, there really is no perfect time for us to go public. We're at a stage where our story is stable and something that we think investors will understand and appreciate. And so we said, look, this is as good or as bad a time as any.
Okay. They say you can never time the market, but of course these days the markets, the way they're performing, the way the new age stocks are also performing, it'll be interesting to see how